How do we track the economy without official government data during this shutdown? Is it like going to Chick-fil-A on a Sunday? You get nothing? And will the Fed cut rates again in October? Based on what? Missing data? Hello, friends, and welcome back. The financial markets seem to be doing just fine, despite the lack of government data. So are they flying blind? Or do they have alternate sources to track the economy? I wanted to check in today with some of your questions regarding this shutdown and the data that is delayed or missing and how economists are handling it. Lastly, you might be thinking about another rate cut, since I'd previously told you that we were expecting 2 more rate cuts this year. So let's get into it. Here we go. Okay, in the absence of government data, economists are relying on a number of private entities. For example, private payroll data like ADP or Indeed, that helps to estimate employment trends or unemployment. Real-time consumer spending trackers look at credit card transactions, and that can be super helpful. Remember, 70% of GDP is consumption, is spending. So looking at your credit card is helpful. Online price indices such as Trueflation, Zillow Rent Index, University of Michigan has an inflation expectation survey, and these can help us monitor inflation. High frequency data and reservation data from OpenTable, I just used that, TSA checkpoint data. Even luxury watch sales are tracked. The most important one is corporate earnings and the guidance they give on their calls. Those are a great proxy for business sentiment and labor demand. So these sources, and there's many more, while less comprehensive than government releases, will offer timely insight and help fill critical gaps. So why do we still expect a Fed rate cut in October despite this data blackout? Let me give you 3 reasons. 1, the labor market is cooling, and this is probably the biggest one. Unemployment ticked up to 4.3% in August, held steady in September. Hiring is at its lowest level in years. So the labor market's probably the number 1 reason. Number 2, inflation remains above the target. Core PCE, which is the one that the Fed really likes, we've talked about this, was last reported at 2.9%. It's not terrible. It's not 9%. But it's still above the 2% goal. And then number 3, the Fed signaling. So Chair Powell basically acknowledged the risks of inaction and emphasized that the outlook for employment and inflation has not materially changed since September. And that is suggesting that the Fed remains on track for another cut at the end of this month, October. I hope that helps. Be sure to subscribe to our channel, and we'll see you next time. Take care.